Have you ever wondered why people rarely use banking checks today?
There was a time when checks were one of the most important tools in the financial world.
People use them to pay salaries, settle bills, transfer money, and complete business transactions.
In fact, for many decades, checks were considered a symbol of trust and financial security.
But if they were so important, what happened? Why do many people today use cards, mobile banking apps, and ATMs instead?
In this lesson, we are going to explore the hidden story behind one of banking's biggest transformations.
Let's begin by understanding what a banking check is.
A check is a written instruction from a bank account holder directing a bank to pay a specific amount of money to a person or organization. Imagine a business owner in the 1890s or even in the 1980s. Instead of carrying large amounts of cash, they could simply write a check and hand it to someone. The person receiving it would then take it to the bank to deposit or cash it. Checks became extremely popular because they solved a major problem. Carrying large amounts of cash was risky and inconvenient. There was always the danger of theft or loss. Checks provided a safer method of making payments without physically moving large sums of money. For many years, banks processed millions of checks every day. Employees had to verify signatures, confirm account balances, stamp documents, and manually process transactions. Businesses issued payroll checks to employees, and customers used checks to pay rent, school fees, utility bills, and suppliers. However, technology slowly began changing everything. The first major shift happened with automated teller machines, also known as ATMs. Instead of visiting a bank branch and waiting in long lines, customers could withdraw cash quickly from machines at almost any time of the day. Then came debit cards and credit cards. Rather than writing a check and waiting for processing, customers could simply swipe or tap a card and complete payments instantly. Next came online banking. Suddenly, people could transfer money directly from one account to another using computers. Customers no longer needed paper documents for many transactions. Then mobile banking completely changed the game. Smartphones turned into mini banks inside people's pockets. Today, a person can pay bills, transfer funds, purchase products, or send money to friends in just a few seconds. Digital payment systems also introduced advantages that traditional checks struggled to compete with. Transactions became faster, easier, more convenient, and often more secure. Waiting several days for a check to clear became less attractive when money could move instantly.
This does not mean banking checks completely disappeared. However, their role has become much smaller than before. The story of banking checks teaches us an important lesson. Technology constantly changes how the financial world operates.
What once seemed essential can become less common as innovation creates better solutions. Understanding these changes helps us understand not only the history of banking but also where banking may go in the future. The next transformation may already be happening right now.
Ready to build valuable skills in banking and finance?
Join our community where students, beginners, entrepreneurs, and future finance professionals learn together.
Discover banking secrets, modern financial trends, career opportunities, and practical lessons designed to help you grow faster.